Alright boys, welcome back to another video. So today I'm going to be going over standard deviation. So standard deviation is one of the major confluences I use. Reason for is it marks out levels where price potentially would want to go or how price will move. For example, if price goes somewhere, I would mark out the standard deviation level and it would project on where price will want to reach before reversing or just protracting a little bit further. I use standard deviation on 1 minute time frames, 5 minute time frames, and 15-minute time frames. So I actually took this trade today. One of my major confluences was standard deviation levels. So what is standard deviation? It's a fib tool. You go on the fib tool, and here are the settings for that. Just screenshot it or do whatever. This is my standard deviation settings. And standard deviation is projecting the last manipulation leg. So if I looked on the 5 minute, this would be the manipulation leg before taking out this sell side. So this would be my last leg of down close candles. So I'll draw it out on the 5 minute. This is the projection, what it looked like on the 1 minute. And my major levels that I'm watching out for, -2 and -2.5. And also -3.5 and -4. But for example, we respected this -2, -2.5. It doesn't look like it on the 1 minute, but if you look on the 5 minute, you can tell how this level, these candles did not close above the -2.5. We had a retrace down into here. Draw out my standard deviation for this level right here. This is the manipulation leg before taking out this high, because you want to stop. Your standard deviation is going to line up with your change in the state. So here would be change in the state. Standard deviation, line it up. Looked on the 5 minute. See my 5 minute lined up with standard deviation. And then I saw the -2.5, -2. Look how we came up here, respected, and then instantly moved higher. This is one of the major confluences we had. I do trade inverse for value gaps. We didn't even have it here. I used my change in state. I used the standard deviation level after bouncing off, targeted the internal high. Could have targeted higher to this -4, -3.5 right here. Could have targeted that. I didn't. But this would be an example of a bullish and also using a bearish standard deviation level. So this was the previous day before. I used standard deviation. I actually didn't catch anything with this. So we have this huge 1 hour for value gap. I draw out my standard deviation level. And if I looked on the 1 minute, this would be the complete leg, last leg of manipulation, because our change in state would be here. So change in the state, your standard deviation needs to align with your change in the state. So I looked, where's my -2 and -2.5? Right here. It also aligned with a bigger time frame PD array. So this is a 15-minute for value gap. The reason I knew this would be a rejection spot is because it lined with this. If I had my standard deviation levels line up with liquidity, bigger time frame PD array, rejection blocks, it has more of a probability of bouncing or getting some sort of reaction out of that level. So I didn't actually take this, but we bounced. As you can see, you could have held this throughout the night. I drew out my standard deviation leg here, drew out my -2, -2.5, and my -3.5, -4. So this trade ended up playing out overnight, kind of accumulated. It's respected this level, this 15 minute. It still respected this -2, 2.5 level. And then we ended up getting the move up to -2.5 on this standard deviation leg. We caught it aligned with buy side. Immediately after touching that, we retrace, get a move, retrace, and then end up hitting this -4 level. And as you can see, after hitting this -4, we get a bigger retrace down lower. Alrighty, so I don't only implement standard deviation, I also use OTE. I haven't used it much recently, But here's, for example, when it would have worked. So you can draw out this range right here from high to this recent low, because at a point in time, price would be like right here. So you draw from high to low. You'd wait for your change in state. Here is OTE of the range right here. You could wait until you tapped this 0.62 or waited for this 0.79 level. Wait for the tap. Once you see clear, clear internal model, whatever your internal model is. So this would then be your change in state. This would be your change in state, reacting good off of this level. And then you would buy here, stop at that low, targeting internal high. And then you could let runners go up to this -4 and -3.5 level. And boom, full TP.